Pranjo, no takeaway from the fact that this is a day which, as students of financial history, we would like to remember very, very fondly. Of India's finest investor has now taken a fine business public, and for the first time now, Indians can publicly participate in D-Mart. But for those who have aspirations to bet on his dream, the challenge is that you're getting the stock at a P multiple of 100, and you understand the importance of value investing more than anyone else.
Yes, Nikunj, it's a very, very important development in the market, Indian market. It's a case study, basically. It's a futuristic business. It's a premium company, and it's a super premium promoter. Everything together in a simple business. That creates the premium valuation also. But this company has long way to go in its business model. It maybe, it's the last 10, 20 years, it was a different phase altogether. Now it will be going to a very different league. Companies capable of raising resources, the funds, and, grow much faster, manifold faster. So that is why people are willing to pay a premium, a super premium, 100 P. Maybe the company is now worth around 11,000 crores kind of a revenue company today for the current year. Maybe 400, 500 crores kind of a net profit. Everybody is wondering how can it be valued at 40,000 crores. So that is the magic of equity. The wealth creators. It's a very unique wealth creation happening. Mr. Damani is a unique wealth creator. Started, he's the fantastic market person. He knows the pulse of the market, and that's an amazing kind of mix of very important elements in one single company. So investors are going to be thrilled and excited about it, and that's what is reflecting in the stock price, the 100 PE, and all those aspects.
No, that indeed is the case, Puranjo. And, I just want to keep it with that graphic plate on our screens before I take up my next question. Look at the peer comparison on inventory days and creditor days. That just talks about the efficiency in running this business and how that can help as a strong differentiator to peers in the industry. Spencer's, Future Retail, inventory days, essentially the days it takes to stock the inventory before it clears out, and that just reflects that D-Mart has the most condensed cycle when it comes to pushing inventory out from its warehouses. Creditor days is the repayment cycle of, and again, this is essentially talking about short-term cash repayments as well as working capital requirements being managed, and there is high efficiency there. They beat the market by a big margin, 8 days compared to, well, the numbers say it all.
See, whichever matrix you look at it, I mean, D-Mart is cut above the rest. So there is no point in debating whether they are a great company or not. They are. D-Mart has got created when the world discovered e-commerce. D-Mart has got created at a time when the Birlas and the Reliances of the world, they were trying to put complex logistics into place to manage, even simple businesses like grocery business. The point we debate now is that at a P multiple of 100, what is there for the minority shareholder? If you buy now, when do you make money? And if you don't buy now, are you missing on what could be, an avenue to participate in one of the biggest companies? So my sense is that you could wait for bad days to buy the company, because retail business is a simple business to understand. It's not a new business. It's a business which has a benchmark in which how you value the businesses both locally and globally. It's a business which will not be giving you growth rate like IT companies or pharma company gave you a couple of years ago. So this is a business which will grow at about 25 to 30%. But for that kind of a business, do you pay a premium which is north of 100 times? That's where my reservations are. Today there's euphoria, there is a bit of a buying panic, the free float is very limited, 10% has got diluted, a lot of that is still lying with anchor investors which is locked in for 1 year. So the free float I think is not even more than 5 or 6%. On that kind of a free float, obviously all kind of give and take and price bids would happen. But that's my sense on D-Mart. Great company, great business, premium promoter, simple business, organized very well, but price is where my reservations are. Wait for a bad day, let the fraud settle down. You don't want to be chasing stocks. You want to be a buyer when you have reasonable amount of margin of safety. Now, Arvind Singhal of KSA Technopack has been able to crack the code on why D-Mart has been a success story. So Arvind, what is your sense? I mean, what are they doing so special which others are not able to crack? The Birlas and the Tatas and the Reliances of the world are still struggling.
See, firstly, I think it should reassure the people who are still struggling in the retail space in the country that it is not something which is impossible to crack in India's context. We need some successful role models, and I think D-Mart is certainly one of those which can provide a lot of learning to the people who are still struggling. I mean, you just talked about Aditya Retail. Even Tata Tesco hasn't really made that much of an impact there. Reliance has done very well in some formats. It is not doing so well in some others. And I personally feel, therefore, that as far as especially the value supermarket stroke small format hypermarket is concerned, it's a very good format for India. And we should see a lot of other players sort of adapting their businesses to even more closely follow what D-Mart has been able to do so successfully. I also anticipate some consolidation, by the way. So within next 12 to 18 months time, I wouldn't be surprised if we see some of the larger names, I don't want to speculate on any one of them, may want to merge or exit in favor of D-Mart.
Right. B.S. Nagesh, who's founder Terrain, which is Trust for Retailers and Retail Associates of India, also joins in with his perspective. And Nagesh, what's most important is what this does for the sector as a whole. We've been saying this, I mean, D-Mart is seeming to be for retail what Indigo has been for aviation. The Indian retail sector seems to have been, re-rated, so to speak, with this bumper listing coming through. Maybe the perception has not changed completely, but it could definitely give a facelift to the sector.
Well, I think the story continues as it was envisaged 20 years back, which is all about consumption. I think the only difference that has happened is that the environment is becoming slowly more conducive towards consumption and facilitating modern retail to perform well. So I think there are 3 or 4 or 5 incidents that have happened, or actions taken by the government, or actions in the market which has changed. One, I think, is that the whole e-commerce market, which actually came up in the last 2 years with discounting and with cash burning, seems to have got into senses, and suddenly things are looking more level and grounded. That's one. So people, as customers, one realizes the reality of shopping online, offline, or omni-channel. The second is that all said and done, one by one, the government has opened FDI. Maybe it has not opened FDI in the multi-brand sector, but a lot of FDI has got opened up, whether it is single brand or whether it is multi-brand with restrictions. And therefore, that door opening itself is making a difference. If you look at it, Zara, H&M, Forever 21, I think one by one the brands are coming in. That's the second change. The third that has happened is that the GST is going to be a big game changer for the retail industry. For a country like ours, I think we need to get a national movement of goods, services, taxes. I think that is something that will happen in a very, very positive way. Also, from a retail industry, because of the MRP regime, as an industry, one could not take the set-off of service tax on rentals, whereas with the GST, the industry will be able to take a set-off on the service tax on rentals. So most retailers are likely to make a few percentage points or a few basis points gain in their P&L. On top of that, post the demonetization, I think suddenly you see that the use of digital payments have gone up. You also see that customers are moving from unorganized to organized. So the whole platform is becoming modern and organized retail, and therefore the organized retail players are seeing benefit. So I would say the ecosystem has become very good.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.